Hello, I'm Peter Towers, and Managing Director of ESS BIZTOOLS. Welcome to the ESS BIZTOOLS Accountants Minute podcast. Today our subject is advisory that pays helps SMEs secure funding. Australia's funding landscape is full of untapped opportunities, but it requires knowledge, strategy, and proactive support to navigate. This is where your role as the trusted advisor, an accountant, chief financial officer, business advisory service, bookkeeper, whatever role that you are offering as professional advisors, you can really assist your clients to take advantage of the wide range of financial injection opportunities available to SMEs in Australia. So where are they all? Well, they're there through government grants, primarily research and development, but export market development grant and other government grants, both federal, state, territory, and some local governments around Australia. And then there's equity raising programs. When I was a young accountant, there was only one way to raise equity for SMEs, and that was through what became known as Section 708 of the Corporations Act, when it was merged into one act in Australia. But prior to that, all this was run by state legislation, and there were some restrictions. But now we've got crowdsource funding, equity raising, and early stage innovation companies, so that there's opportunities for companies to raise money. I think a lot of the problems is your clients are not aware of these opportunities. Why aren't they aware? I suspect not too many accountants really talk to them about those opportunities. And I think that's unfortunate, because these opportunities exist, and many of our clients can look at this opportunity of being able to raise capital. I think we need to be honest in talking to our clients. There are some potential risks and problems with inviting other people to acquire shares in the company, but I think on the whole, as long as your clients are honest and hardworking, they will benefit from the injection of cash into their business that they do not have to repay, and they do not have to pay interest on. And this is your opportunity to really assist your clients, because it's worth reflecting how your client's going to raise capital or even secure a major government grant. They're going to need your assistance, your input. And in most cases, they're going to require business plans, predictive accounting reports, looking at projected budgets, cash flow forecasts, the key drivers, that vital area, and the projected balance sheet, and an understanding of whatever facility they're using, whether it's a government grant or it's a capital raising from the marketplace. They need to understand how these things work. And if they were larger, they would be employing a full-time accountant or chief financial officer who would be giving them this advice. They're really looking to you to give them that advice and inspiration, and to follow it through, to dot the I's and cross the T's and make sure everything is working legitimate. Your SME clients are experts in their industries, but they often lack the tools, time, it's a huge problem, or expertise to build compelling funding applications. It's not their expertise area, is it? Without your guidance, great opportunities fall through the cracks, and these businesses miss out on this opportunity of being able to raise money from the public. They need you to be able to explain the process, to explain that issuing shares to some other people is not the end of the world. And I've had clients who have had that attitude, and I've sat them down and got a cup of tea or coffee and said, now let's work through this. And I think it's worth reminding them how all the great companies started. In Australia, our biggest company, I think, still is BHP. It's worth going back and looking at the history of BHP. It started in Broken Hill. A group of miners sat down and decided to form a company. I don't know if any of them had management experience or understood corporate governance or whatever. I assume they went to a local solicitor and possibly an accountant and said, I want to register a company. And they got started. And along the way, as they would have had input from accounting advisors. And over the years, of course, they employed a lot of accountants. And they grew to the massive corporation they are today. But they started very small beginnings. They're the only company in Australia that has the P for proprietary in their name as a listed public company. And that's because they become such an important fixture in the overall financial affairs in Australia. But it's worth talking to your clients and perhaps using them as an example. So these advisory services that create real impact are important because your clients need this sort of information if they're going to be able to impress the people making the decisions on government grants and as investors. I think it's important that you ensure that your clients are investment ready, funding ready, that they understand the necessity to make sure their financial data is up to date. They've got financial accounts that they're happy with, that they've analysed their figures through key performance indicators. And the format we use in ESS BIZTOOLS for that is the business health checks. It's amazing how quickly it's easy to notice a wrong figure or what should be a wrong figure that you need to investigate when you have your comparisons set out in a spreadsheet of gross profit percentage or EBITDA turnover percentage or the yield percentages or the wastage or shrinkage percentages. These are important, and the clients should be able to avail themselves of this information. Now, not many SMEs are going to have the time to sit down and prepare that sort of data because they're all too busy. And at the end of the day, they're tired, so they may have time to write the checks if they're still writing checks, or do some invoicing. If they're still writing the invoicing, they're not using a computer. But most of them won't have the time to undertake this business health checks, but the system that you're implementing for your clients should cover that so that they get that information and you bring it to their attention. In some cases on a daily hookup, but others weekly and monthly. Financial forecasting is very important. It all starts with the business plan. And then the predictive accounting reports is the financial interpretation of what's in the business plan. Not the other way around. It's the business plan first and then the predictive accounting reports, which shows your client and any other person, be it a government department looking to assess the suitability of the business for a major government grant. They don't look at these for sort of reports for minor government grants, but major government grants. But in raising capital from the public, it's very important that there's a realistic business plan being prepared, and following from that, there's a realistic set of financial projections that have been prepared, financial forecasting, that links back to that business plan. And then we have the capital strategy development. What's your client going to do with the money? Why are they trying to raise money? is an important question. It might be because they want to expand their operations and build a new factory or a new shop or a new office. It might be because they're going to hire a specialist team to undertake research and development type activities. And they foresee that that investment will ultimately develop into an outstanding product that they can market throughout the world. Or it might be a major research and development funding that they're getting ready for. Whatever it is, that activity or activities should be summarized in a document that's available for potential investors to view and understand. And then we have the compliance and documentation of all this. There are compliance requirements in whatever we do. And what a potential investor is interested in, what's the business's situation with the tax office? Are all taxation obligations current, up to date, paid, or is there arrears? And what about obligations on other government type activities, workers' compensation, superannuation? Is there outstanding amounts owing? These need to be factored into the financial accounts, and there needs to be an answer as to how the business is going to rectify those arrears, because investors will be very nervous about investing in businesses that have got arrears, especially if they're not disclosed. And another very important point is, as part of this process of looking to raise capital, it may be intended to appoint a couple of new directors. They could come from the investors or other people who have been invited to join the board. You need to make sure there's no outstanding debt at that stage to the tax office for superannuation, because those new directors could become liable for those debts, and they won't be very happy about that. So they'll be demanding, or they should be demanding, if they're properly briefed and informed, an overview of what the business's situation is with the Australian Taxation Office, with state governments for things like payroll tax and workers' compensation, and generally creditors in general. Because when you look at some of the larger company failures, it's quite amazing what those debts add up to. And another very important area that a lot of people forget about is employee benefits that have accrued, superannuation liabilities, holiday pay that's outstanding. Can all add up to a lot of money depending on the number of employees. So you need to have thought about all those issues and ensure that the financial data that's going to be handed over to potential investors covers those items. I think you can position yourself as a key player for your SME client success story by helping them becoming funding ready and secure the capital they need to scale up their business. They'll be very happy. So I think what you need to think about is, well, how can you help your clients in this area? I think all accountants, perhaps not all, some are already doing these things, I know. But we need to be raising the flag, to be promoting to your clients and your prospects that you're able to assist them in some of these issues that probably don't occur every day. And you may not at present have many clients involved in the capital raising processes. So this can be raising capital as crowdsource funding, equity raising. Now, if the company, it could be a private company or an unlisted public company, has got a turnover of less than $25 million on a worldwide basis, and value of assets worldwide less than $25 million, and not listed on a stock exchange anywhere in the world, then that company could raise up to $5 million in 12 months through the crowdsource funding equity raising process. That's not bad, is it? No prospectus needed. There is a crowdsource funding offer document, which is a very small component of what would normally be in a prospectus. And there needs to be an appointment made of a crowdsource funding intermediary. There's 16 of those businesses appointed in Australia. Unfortunately, I think there's only 2 to 3 of them that are fully occupied because they're not getting enough deal flow. So accountants, please think about that. There's $440 million being raised. I think it could be substantially higher. But when I talk to the key intermediaries, they are not very impressed with the deal flow they're getting. In fact, one of them produces an annual report which indicates that they support somewhere around about 3% of the businesses that approach them, and then 74% of those actually raise money. If we could get a lot more applications in the funnel at the top and spread them through, I'd like to see those 16 intermediary firms all very busy processing applications for SMEs. And they don't all have to be for $5 million. There's only about 4 companies actually raised the $5 million in a 12-month period. The smallest one I've seen was about $50,000, but there's a lot around the average of $830,000. That's what they've raised. And the company can go back the next year and raise more money if they like. They've just got to go through the process again. But it's a great activity. And from your point of view, it creates interesting and challenging work, which is one of the vital ingredients of this problem I hear firms all over Australia complaining about. Talent attraction and talent retention. I get people, when I ring them, they say, now, Pete, can you help us find some staff? I say, no, I really can't do that. I've got clients all over Australia in accounting firms, and I'm not going to help poach staff from one firm to another. But my observation is, what work are you asking your team members to undertake? And if it's totally built around taxation, I would be considering that and saying, could we create some variation? I think you should be looking at advisory services. And that's an important reason. I'm sure it's not going to be the only reason. There's all sorts of other things that are really leading accountants into another wonderful era. I think accountants are the lucky profession. But we tend to stumble into some of these lucky positions as a profession. Some accountants were very anti the GST, but the GST brought a lot of extra work for accounting firms. And now we've got a scenario that's saying that there could be a lot of problems for accountants, bookkeepers, as we approach the end of this decade. Nearly 3 years ago, in fact, on the 8th of September this year, it's the 3rd anniversary of the very important comments that the then tax commissioner, Chris Jordan, a former partner of KPMG, made at Xerocon 2022 in Sydney, when he said that accountants and bookkeepers need to become the trusted advisor to your SME clients so you can upgrade the services that you're offering to them. The services that I'm referring to today. Because there is changes occurring. The tax office is upgrading its systems. And there'll be more direct contact between the wage earner, tax return earner, who will be lodging direct, according to the ex-commissioner, and even SME businesses. And look at what's happened already. You know, your payroll basically goes through the tax office. Superannuation payments are going through the tax office. They're aware of a lot of things. So that leads to a situation where there could be less work, and that's why he was urging accountants and bookkeepers to become the trusted advisor to help your clients with these advisory areas. And then along comes AI, artificial intelligence, and a lot of people are talking about it. And there's all sorts of doomsday reports hitting the media. But some people are saying, be smart, you can do a lot more work with the same team. Don't look to reduce staff. Try to undertake additional work. Sure, some people will need to be trained. They can be trained on the ESS BIZTOOLS package of advisory services. Who would be the champion of research and development introduction in your firm? Who would be the champion of the complete premier research and development package, which goes from the original inquiry through to the lodgement of the tax return, claiming the research and development rebate? Who will be your expert in crowdsource funding equity raising or early stage innovation companies or chief financial officer services? Now, some of these people could be currently working in your organisation. You might be saying, well, we might need them if AI really comes in. Well, if they're good people and competent and can be trained, we'll train them in some of these other services so that you can supply. And that's why I said I think accountancy firms are a lucky group of industries. There's a lot of other professional groups not in such a fortunate situation. But this is not a given that accountants are going to benefit from these services that I just mentioned. Because I think if you don't supply these services, other people will look at it and evaluate what they could do. You might find some legal firms are saying, well, we'll employ some ex-business operators, bank managers, stock and station agents, and set up activities to give business guidance to businesses. And if the accountancy firms want to hang on to the remnants of the tax return and tax advice area, let them. We'll get the cream. I know of some accountancy firms, a couple of our subscribers, who are aiming at 100% advisory work. They don't want to do the tax side of work. They hive it off to other people. I hope all these comments are giving you food for thought. What can you be doing in your bookkeeping or accounting firm to take advantage? I think there is a tremendous opportunity, but you need to start moving. Because by the time we get to 2030, which seems to be the date that a number of people are now saying, well, this is when there's going to be a lot of questions getting asked, you need to have been able to diversify into offering other services, to have grabbed that market before someone else does. And I can assure you there are other people looking. I get inquiries from groups of people who are not accountants, who are looking at the opportunities. Could they supply advisory services? Someone did say to me, have I got to be a qualified accountant to deliver advisory services? I said, no, there's no legal requirements. I always assumed that accountants would want to deliver these services. And some do, of course, but there's a lot sitting on the sidelines who haven't made a move, haven't made a decision. Well, I'd urge you to be looking at it very seriously, because I suspect that if accountants don't want that market, and you're in the driver's seat, really, you had these people as clients already. But I've spoken to some American accountants who are going down the path of saying, well, we'll do the advisory work and we're going to farm out the tax return work because we don't like doing tax return work and it's boring and we have trouble getting team members to do it. Doesn't that sound familiar? It's what we're hearing in Australia, aren't we? So unless you have made the move, unless that's your decision, you might miss out. So let's move on. So the whole aspect that I'm talking to you today about is covered by the headline: turn compliance into capital advisory. Help your clients get set up properly. There's 2.2 million SME businesses in Australia. Now, I know some of them have got more than one business. My best estimate is probably there might be 1.2 million individual businesses. That's a lot of businesses. And unfortunately, the failure rate is at the highest level. We've got the highest level of insolvencies since the records started being kept. So there's a lot of problems. There's a lot of issues for any of your clients who are trading internationally or getting products from overseas. There's issues in Australia. I sometimes wonder whether the government in Canberra really wants a strong group of small, medium enterprises. They talk about it, but then the action doesn't support that, I don't think. So a lot of SME clients are starting to feel as if they are fighting a whole range of organisations. Banks are withdrawing support by shutting banks in small country towns when there's a whole stack of businesses operating in those towns. Mightn't be right in the town square because they're out on properties or they're mining contractors, but now got to drive hundreds of kilometres to get some cash for their bars or their events or whatever they're running. I think SMEs need a very friendly supporter, someone with a smile on their face that says, I'm here to help you to overcome your problems. And I'm going to give you advice. I'm going to finish this podcast with a comment that was made to me by a business operator about 4 weeks ago. He rang me up and said, Pete, can we have a discussion? Now, I hadn't heard from him in about 5 or 6 years, but I first knew this man probably best part of nearly 20 years ago, I suppose, was when I first struck him. A very successful business operator. And I went out to his factory and we sat down. I said, what's the problem? He said, well, I'm looking to do this and do that. He had a major research and development program underway, and he was looking to do a joint venture and looking for some advice. And I said, well, who are your accountants these days? He told me, and I said, well, wait there. They weren't the accountants when I talked to you 5 years ago. No, they had someone else then, but they've gone. And it worked out he's had 4 accountancy firms in about 20 years. And I said, well, what's the problem with these accountants? He said, no one gives advice. No one stands up to me. No one tells me what's right and wrong. They're only worried about tax. Now, this is his observation as the client. This man's running a business with a turnover of $23 million, 70-odd staff. No internal accountant. I think he should have. And the external accountants, it might have been in their original briefing and their appointment. I'm not sure on that. But what the client's saying to me, they're not proactive. They don't give any advice. They don't express an opinion one way or the other. Now, I can assure you, if those accountants were working in public companies where I was for 12 years as the Chief Financial Officer and Company Secretary of a listed public company, I had to make opinions sometimes very loudly every day. The CEO would be on the phone. Can we do this, Pete? Can we do that? And I'd say, no, you can't do that. Why not? I said, well, I'll give you a note on it, but this is basically what I'm saying to you. You wanted an answer now. You're about to jump on a plane. You told me when you got on the phone. You're not here. And no, we can't do that. It's not legal, or we haven't got any permits or whatever else. Times you need to take a stand to help your clients, to guide them through these processes. So we started this discussion today looking at all of the challenges confronting our SME friends about how they might go about not missing out on funding opportunities, being aware of the opportunity. Whether they decide not to take it is really not the issue here. I think the issue is that as a profession, accountants are bringing this to their attention and saying, you have the opportunity to apply for a major government grant. It might be $300,000 benefit through the research and development, or it might be the ability to raise $1 million under the crowdsourced funding equity raising process and issue shares. And sure, those new shareholders might now own 20 or 25% of the company, but it gives that very important component called cash to be able to do things, to build a new factory, to set up a research and development team, or to do whatever else is required. If you want to have a discussion with me about any of these matters, please don't hesitate to contact me. Send me an email, please, peter@essbiztools.com.au. Or if you'd like to have a look at our website, please do so. www.essbiztools.com.au. And if you would like to have a 40-minute complimentary Zoom meeting with me, where I will ask you some questions about your firm, you can ask me some questions about ESS BizTools, and I will give you my opinion as to how you might be able to structure your business. Because I can assure you of one thing, I will definitely give you my opinion, because I think that's what our role is as advisors and as accountants, to guide our clients. And if you're asking me, I'm treating you as my client. Have a great day. Talk to you again next week. Goodbye.